Welcome back. More headlines from this Bloomberg Business Week interview where the President Trump says he would look to impose tariffs of between 60 and 100% on China and would impose a 10% tariff on other countries. Let's get more on U.S.-China relations and this new news that former President Trump would put those tariffs on that country. For that, we'll bring in Safanad's chief investment strategist, John Rutledge, also a CNBC contributor. John, it's good to see you again. Have you been able to take a look at some of these headlines? John, have you been able to read some of the what Trump has told Bloomberg Business Week?
No, I have. And of course, that's coming on top of miserable growth numbers from China. So we're not very welcome. And Xi Jinping's in a meeting with his 370 best friends today at the plenum. So not good news.
Well, give us your sense of what you think their options are after the last few days, their PPI numbers, their retail sales numbers, the pressure that their consumer is under given what's happened with property prices and stock market prices.
Yeah, you know, the big number is minus 5% growth in home prices. And it's the debt from property and from the municipal lending that's causing the big growth drag in China. And of course, long COVID overhang as well. I think that tariffs on top of that, you know, we've already got tariffs on EVs coming in from both us and from the EU. And if you put Mr. Trump's 100% numbers on top of that, then China is not going to grow at all next year.
One of the quotes from this piece from the former president: "I can't believe how many people are negative on tariffs that are actually smart. Man, is it good for negotiation?" Is that something you think the market could eventually get its arms around?
Well, the truth is the market and even the economics profession have turned a lot less free trade and a lot more pro-industrial policy in the last couple of years. I don't think the market's going to like the 100% tariffs coming on, but I do think that the U.S. growth right now is quite strong. We've got the Fed that's about ready to turn the corner and start to bring the rates down, which will make growth stronger yet. We've got a troubled property market, too. But Trump coming in probably means more stimulus, more pressure on the Fed to print and grow. But the property problems are really at the heart of China's issues and are not going to go away no matter what China does.
John, when Trump was in office the first time around, we went through the tariffs exercise, and it actually served him well to go down that path. Obviously, he's putting his foot on the gas dramatically now. But when the Biden administration came in, they kept most, if not all, of those tariffs. Yes. You can correct me if I'm wrong there. And they actually put a whole bunch more on or increased them a couple of months ago. So I think this is him just sort of separating himself, trying to be a little more aggressive there. But the real question I have for you is where we picked up on Taiwan. I am a firm believer when a country is weak, they act strong and vice versa. Do you think that China is so weak that it adds to the odds of them invading Taiwan?
I think they're so weak economically, but let's also remember they've had major corruption scandals and removed 2 senior ministers in the last year. They're not in a position to be able to trust their own military to be able to execute. So I think the Taiwan risk is always real, but I have to say in my personal portfolio, TSM plays a big part. I don't think that's really going to happen. It is true, however, that China has been the big winner in the Ukraine and Russia war. All of the rest of the parts of the world, China, US, EU, Ukraine, and Russia have all depleted our weapons inventories, and China has not. So China is relatively in a much stronger position now than they were 2 years ago.
John, it's Karen. Thanks for being on. So let's say Trump will pick somewhere in the middle, 80% tariff. If you were China, if you were in their shoes, what would your retaliation be for an 80% tariff from if there were a Trump administration?
Well, that's the first time, Karen, I've ever heard anyone say 80% tariffs are in the middle. So congratulations on that. But they will look for a way to retaliate. The only way they've really got to do it is tariffs and also with the currency. But truth is, they've already played the RMB for as much as they can get out of it. Most Russian transactions are in RMB now. And they're reducing their treasury bill holdings already by $1 trillion in recent years. There's not too much more they can do there. So I don't think they've got a whole lot more bullets other than drive a lot more battleships around Taiwan and make a lot more noise with it. But they don't have any sharp economic policies to be able to pull the trigger on here.